Okay, I'm going to do my weekly review on the market. I'm going to start with ES, and I'm going to do the monthly. We got one more day. We got one more trading day, Monday, so it could change some. But as of now, the monthly, it looks like, I mean, we don't have to, but there was this level here that I notated that's also lines up a lot with the 20 SM. I'm sorry, that's the EMA, the red line. So there's a possibility we can go here. We're at the 60 RSI. We could hit the 50 RSI, which we did in October, November of 2023 in that correction. And the bear market in 2022 on the monthly, we hit the 50 SMA on the monthly. Right now, I would definitely want to see what we do here. If we hit this level here, as of now, and see where it takes us on the RSI. All right, on the weekly, let's see. We made a lower low, at least a lower than last week. We did not make a lower low as far as the daily, as far as the bottom. We didn't hit the bottom again, but we did make a lower low. We popped up, and a lot of it was after the FOMC meeting. We popped up, somewhat hit this neckline, maybe got a little bit above the neckline on the weekly, and then we just came right back down. Again, this is the first level I'd be looking at is the near the bottom of this week, and then it'll be this level will be my next level, which is a support resistance level. It's an important level here. All right, as far as the RSI, the week before we hit the 40 RSI, we bounced off of it, and now we're right back at the 40 RSI on the weekly. Let's see. The last time we got to the 30 RSI was on the weekly, was like doing the bear market in 2022. So I don't know if we're going to do that or not. We just hit the 30. I don't know. I'm not sure. I can't say for sure. All I can say is that we're bearish. Obviously, on the weekly, we made a lower than last week's low. We closed below it. We got above the 5 EMA, and then we ended up closing below it. So right now, it looks bearish to me on the weekly. On the monthly and the weekly, we look bearish. All right, on the daily, again, we look bearish. The 5 EMA is still under the 20 EMA. We got pretty much to that neckline, had a closure above the 200 and the 20, and then we just reversed down. Looks like we got here on, I believe that was Monday, the 25th. I think that was Monday. I don't know. But we got to this level, and we retested it again a little bit this day, and we rejected it, and we just came back down. I was looking at this level. I didn't trade on Friday when we were falling like crazy, but I glanced every once in a while. I was looking at this level thinking maybe we get some reaction at this level, and maybe it served as support, but obviously we broke that whole level and went down further. So like I said, it's going to depend on what happens on Wednesday when Trump reveals his whatever tariff plan. That's what's going to decide what the market's going to do as far as drop below here, and maybe we'll actually see a bear market, or we'll come back up and recover. So it's kind of the market's kind of trying to figure out make sure, try to figure out what Trump's going to do. Right now, we're uncertain, so that's probably where we're not prepared to just completely have this was not necessarily the end of the shorts, because we got up here, because at this point we're still uncertain as far as what he's going to do with those tariffs. So it's not a time where the market wants to get bullish when there's too much uncertainty. So yeah, we went down. That's where the market is now. Let's see. Let's look at NQ. Pretty much the same thing, I'm sure. Yeah, I've got similar level on the monthly, where we would also hit the 20 EMA. If we were to come down here, that's another level that I have. On the monthly, let's see. If we hit the 50 RSI on the monthly, the last time we got under the 50 RSI was the 2022 bear market. We held under the 50 RSI. We haven't held under the 50 RSI on the monthly. We didn't even hold under it during the pandemic. That was the 2000, looks like the 2009, probably the Great Recession, when 2008, 2009, was the last time we held under the 50 RSI on the monthly in NQ or the NASDAQ. And we got to the 30 RSI back in 2009. We got to the 30 RSI on the monthly, which is very bearish. But since then, since the Great Recession, we've only had one time where we've held under the 50 RSI, which was the bear market of 2022. So we're quickly approaching the 50 RSI on the monthly. So we'll see what we do here, which may be this level. I don't know. Around this level, maybe a little lower before we get to the 50 RSI. Let's look at the weekly. All right, same as ES. We never closed over the 50-day moving average on the weekly. We went above it, but we never closed above it. We didn't close above it last week, and the week before last, and we didn't close above it last week. And of course, we made a lower low than this. So it's looking bearish. Again, the same as ES, my first level I'd be looking at is this, the bottom of this candle, and then this will be my second level that I'd be looking at on the weekly, which is pretty much going to be the same as the daily. That is such a huge red candle we had this day. It's terrible. Yeah, that was a level here where we consolidated. We're in a range, and we broke that level. We broke that range and just continued on down. Yeah, again, it's just going to see what Wednesday looks like. Monday, I wouldn't be surprised if we gap down a little bit. You know, I haven't heard any news that would lighten up the situation, so I don't know. It wouldn't surprise me, I'd say that much. All right, now let's go to something different. Gold. Complete opposite than the indices. Gold has just been looking strong. The uncertainty has just driven people to good old gold. We're making higher highs on the monthly. We're all the way 80 RSI, but we stay in that level on the monthly in gold because we're just very bullish. Yeah, we made a higher high. Not really closing under the 5 EMA yet on the monthly. The weekly, the RSI is also near 80. It's the same. We're staying over the 5 EMA on the weekly, not wanting to get above that, making higher highs, and just a bullish commodity right now. Hot commodity. All right, on the daily, same higher highs. We had a little pullback right here. And this would have been a good opportunity well, actually we kind of ranged these 2 days. I'm sorry, these 3 days we ranged, and then we just popped up. Came down, had a closure under the 5 EMA on the daily, and ranged, and then we just popped up, made higher highs, broke this and made a higher high. So gold is doing the complete opposite of what the indices or the stock market is doing right now. It is definitely benefiting from all of the uncertainty. All right, the next one is crude. We're still in this wedge here where we're making lower highs, but we're having these equal lows. We can't close below this. This has been support for a while. We can't seem to close below it, but we don't really want to get up higher than this wedge, this trend line here. Let's see on the weekly. Let's see. All right. That's the same thing that you see. We can't seem to close below that. We want to be above it. The interesting thing, I know that sometimes whole numbers can be psychological areas of value, like this 70. Seems like we got there and we rejected it. We got this big wick right here on the weekly where we rejected going over the $70. So I'm wondering if that's going to be a barrier, if that's going to be the limit. We're not going to go over $70 on crude, or are we going to go up higher? Right now, we're still making higher highs. We closed, even though we had this huge wick, we still closed above the 5 EMA, and we closed above the high of the prior week. So we'll have to see what happens. Let's look on the daily. All right, yeah, it seems like we got to that $70 and we rejected it pretty hard. Wouldn't necessarily say it's bearish right now. This could just be a pullback to the 20 EMA and then come back up. I wouldn't be concerned about that unless I saw a close under the 20 EMA on the daily. Right now, I mean, we still have the 5 EMA over the 20 EMA, so we're not necessarily bearish yet. But right now, that 70 it's got to be a concern as far as $70. Is that where the market is saying we don't think crude should be over $70 and starting to head down? We'll see. If we start to head down, I mean, crude's kind of, like I said, I don't like to swing trade crude too much. I'll day trade it every once in a while because this is not the kind of market I like to trade. This is the daily, and it's looking like a 5-minute chart. There's so much volatility and movement up and down, so much ranging on the daily even. So it's not necessarily an easy stock to swing trade, although people do. They've figured it all out. So right now with crude, as far as long term, in order to be bullish right now, after we hit the 70, you'd have to break over the $70 and the 50 EMA since it's so close. And if we break over the $70 and the 50 EMA, then there's a possibility we can probably go to 72 or the 200-day moving average on the daily. But let's see. The RSI, that looks interesting. We got above the 50 on the daily, which we have been struggling to do because the 50 RSI on the daily has been a resistance level. As soon as we get there, we've just been falling. We finally broke above the 50 RSI and we went down to the 50 RSI. Could that just be a retest of it? So that's why I said I wouldn't be necessarily bearish right now unless we broke the 20-day moving average, because this could just be a retest of the 50 EMA and go back up, and of course we can always go back down. But that's interesting to me because yeah, we've struggled to get above the 50 RSI on the daily, and we did break that. So that's it. So basically, I think Wednesday is going to be the What happens on Wednesday is going to be a pretty good indication on what the market's going to do. You know, whether they like whatever Trump comes up with or they don't like it. As far as the indices go, that's going to be the defining factor. It's a good time if you like to do long-term investing, which I do. Most of my money is in long-term investing. I've been DCAing, especially dollar cost averaging when, especially when we started. I stopped when we went up, and then I started back again once I saw we were going down. And these are only like good, the companies that make a good profit that we think we're gonna be here for a while, not the meme type stocks or stocks that don't pull a profit. So it's a good time to dollar cost average, especially if we're under the 200 on the daily. It's a good time to start, if you pile your cash up and don't buy anything, this is the time to just start DCing maybe once a week, so long as the market's going down, into your good stocks, your indices, whatever you have. That's what I've been doing. I mean, I know the portfolio is going down, but I try to take some kind of gratification in buying good stocks at lower prices. But otherwise, that's it. And we'll see what happens tomorrow.